What is going on, investors? Back again. Time to take a look at one of the most popular dividend REITs on the market. That's Realty Income Corporation, ticker symbol O. One of the reasons why they're popular is they have just completed their 601st consecutive common stock monthly dividend. That is absolutely tremendous. That's one of the longest that I've seen. At least they advertise it very well. So here we go. We got a $20 billion company. They just reported earnings today. We'll get to just kind of the top line on the press release. We'll jump into the numbers a little bit, and then we'll jump into the stock chart to see if there's some levels here where you can add this stock. Because as you can see here, this stock is traded a lot higher. You've lost principal here. Your dividend yield isn't as good. So obviously you'd like to add this stock when it's a little bit lower. You get a little bit better yield. At the current price, you're still at a 4.67 yield. They have a forward dividend here of $2.80. This compounds monthly, so you will get a monthly dividend from a company like this. That's why a stock like this is very popular with income generating retirees, or even just anybody that wants income into their portfolio. Now, you do pay up for this REIT. I think if you want to dig in and dig into the balance sheets of other REITs out there, you're going to find ones with better PE ratios, maybe even better dividend yields, and maybe better overall statistics overall. But this is a company that's been around a long time and advertises itself very well, has a very easy ticker to remember as well. All those things play into the fact that you do have to pay a little bit of a premium here, but this is a stock that's kind of bounced around here, and we'll talk about that here in a minute. Like I said, they just declared their 601st consecutive monthly dividend, so that's a long time, in my book at least. Finally, they just reported their Q2 earnings just like, minutes ago, really. I think the headline here is right up here that they collected 91.5% of July rent. So that's a positive. They're exposed a little bit less to like malls and kind of consumer driven traffic. They have a little bit more exposure to like the Walgreens types and maybe kind of the strip mall access. And so collecting 91% of a rent is a very positive, I think, because they have a lot of customers out there that are still in business and still have been open during this time. Let's jump into the numbers just really quick. We won't dig into these too deep, although we certainly could. We've got rent here. Take a look. Rent went up. Here we go. 3 months ended June 30th here, 1920. This is holding up as well as I think you possibly could hope for. I mean, obviously you'd like for this to tick up and grow really fast, but this is holding up, I think, as good as you can hope for in a really, really difficult environment for a lot of their customers. Went from 364 up to 410. That's not bad. Revenue 365 up to 415. We see on the 6 month it's holding true there. We were at 720 and it's up at 829 million. That's really good. So total expenses, obviously they have depreciation. This is not a cash expense, but it is something you have to recognize from an accounting purpose. We've got interest here. We've got property. We've got general administrative. We've got income taxes. Those are always important, and provisions for impairments as well. Notice those didn't tick up that much. So provisions for impairment, I'm assuming this is for people that don't pay rent and things like that. Those haven't ticked up. I mean, they've ticked up a little bit, but it's not too bad. Considering, in the quarter, we're at 400, call it $15 million. So minus, we got 415 here. We minus off the 308. We get down to a net income after you factor in some gains of sales and things like that. And we're at 108 million. Net income attributed to you, the common shareholder, 107 million. So we've got our net income per share, which is important. I don't always pay attention to income per share, but we're at 31 cents. And again, we're at a 280 dividend. So that they're there, that's not overwhelming coverage on this dividend, but it is there, and you'd obviously like for things to continue to move in a positive direction for this company. Now, finally, funds from operations. So you have the net income, you pull that number down. We've got depreciation here, and then we've got the FFO available to the common shareholders. You're at 288 million. That compares very favorably to the 251 from the previous period. And if you look on a 6 month, you went from, call it 497 up to 565. So that's not bad at all. And then if you take a look from a dividend perspective from here, now you're really seeing that coverage. You time this by 4, you times this by 2, and you're well over what they need to cover this dividend, which is obviously what you need them to do since you're primarily investing in this company for the dividend. Now, finally, from the balance sheet perspective, everything looks pretty solid for me. Obviously the land and the real estate held its value pretty much from the beginning of the year. I think that's relatively expected, although on paper it might not mean a whole lot. In reality, it might be a little different story. We've got total assets about the same, total liabilities about the same. We come down here, last thing I want to point out here, and then we'll jump over to the stock chart. So they've got some debt. They've got these notes payable here, and they've got some other term loans, line of credit payable. They've got mortgages. This is a company that not unlike like a real estate investor, they're not going to use all their own cash to kind of build up a company like this. So they're going to borrow money. And take a look at these interest rates. Okay, if anybody of you, maybe not 5.87%, maybe not 4.65, but all of these other rates, if anybody wants to loan me money at this rate and at these terms, sure, I would take it. And we can see here the actual interest rates as of now, they're actually probably a little bit lower maybe. And so you see a percentage of debt. You've got the mortgages down here as well. All this is very, very reasonable in a low rate environment. And I think Jerome Powell came out the other day and said he's not even thinking about raising rates. I mean, he literally did I'm not thinking about raising rates times 3. So rates are not going to go anywhere. There's no rush to run out there and buy a house, and in fact, not necessarily a lot of rush to go out there and borrow money because these rates are going to stay low. And for a company like Realty Income and any kind of REIT out there, low rates are definitely a positive. Now, finally, let's jump into the stock chart. This stock was in a very, very defined downtrend. It's broken out recently here, just in the last actually couple days. It's peaked its head over this trend line. That's, I would consider that actually a pretty bullish trend, and it actually kept ticking up. After hours, this stock is not doing a whole lot. So it's just kind of hanging out here. I think this is well within line of what investors, they say here, the shares fell 1.6 after hours. Maybe I'm not getting the data here, but the stock is relatively flat in the after hours. We had some support here that held at the $56 level. I think if I were to look to add shares, in fact, I think I did buy some shares of Realty Income somewhere. I don't think I hit the 56 right on the head, but I bought it somewhere back up in this range because I had a couple $100. I kind of wanted to throw it at this stock. So I'm in this stock. Full disclosure, I do own shares of this, and I am a long-term holder of this. I'm letting those dividends compound month after month after month. And, if you do get some price appreciation, it's great. I think this stock, if it can continue this uptrend, we actually see it's in a little bit of an uptrend. Although it was in a short-term downtrend, it's broken that. If it can kind of stay up here and keep trending up, I think you could retest the highs back up here at, call it 62 to 65. If it really got on a run, I think you could come up here to $68. Now, I think we're running into the end of earnings season. A lot of the big companies have already reported. We probably only got maybe 2 or 3 more weeks of major companies reporting earnings where it really kind of impacts the market. After that, I think the market's going to focus on the election. They're going to focus on some of the macro environment stuff, the unemployment rate, so that there is some headwinds into the stocks. And if the market just puts that all out of their mind, they don't care who's the president, they don't care what's going on with unemployment rate and everything else, they just assume in 12 months everything's going to be back to normal. Well, yeah, this stock could easily run back up here to the $68 level, I think, without a doubt. Personally, if you're new to this stock, I'd wait for a pullback. I'd wait for it to come in here. The other tip that I get from a lot of investors, wait for this yield to be over 5%. If this yield's over 5%, which it has been several times this year, that is, to me, more of a signal to buy. Although we're very close here at 4.67%. That may or may not be accurate based on today's price change. But that's where I would look to add to Realty Income Corporation, and that may be something for you. And again, if you dig into the REIT space, you're going to find one with a better PE ratio, maybe even a better payout ratio, maybe even better coverage on the dividend. You might even be able to find one that's twice as good as Realty Income. But this is a go-to one for most investors, when they want some exposure to REITs, they tend to come to Realty Income. That's why it's been popular. And again, hey, look, they had 95% rent coverage in July. You got to figure that probably will hold true. I doubt that gets. I doubt that gets really much higher than that. As we see here in Q2, they had 86.5% rent. So it's not bad. So, things are improving a little bit, at least from a rent collection perspective. We'll see how that continues going forward. That's Realty Income. This is a dividend paying stock. I wouldn't necessarily trade this stock. I would hold it for the long term. So if you're looking for something like that, this might be a stock for you. Hopefully you guys enjoyed this one. We'll be back again with more videos. Hopefully you guys enjoying them. Thanks for everybody that subscribed. Leave a comment and hit that like button as well. Greatly appreciated. We'll be back soon. Good luck with your investments.